welcome back to Investing Talk Podcast.
Today we're looking at AST SpaceMobile.
As usual, before we start, subscribe, like, and comment to this video to support the show. Okay, so let's unpack this. We are talking about space, we are talking about connectivity.
Right.
And we are talking about a stock that has been, absolutely tearing up the charts. But I have to be honest right out of the gate. Whenever I hear space stocks, I immediately clench my wallet. I think of massive capital burn, delayed launches, and promises that are, potentially 5 years away.
Sure.
So why is AST SpaceMobile the headline right now? Why isn't this just another science project burning cash in low Earth orbit?
Because let's call it the science project phase, that effectively ended on December 24, 2025.
Oh, yeah.
We aren't talking about promises 5 years away anymore. We are looking at a fundamental shift in the physics of how the world connects.
A fundamental shift.
The core premise here is direct-to-device broadband. And before we go any further, I need to be incredibly precise about what that term means.
Define that. Because Starlink has been around for years. Is this not just that?
It is fundamentally different. Starlink, for the vast majority of its existence, has been satellite to dish. You need a pizza box-sized terminal on your roof or mounted on your RV to catch the signal.
Right.
AST SpaceMobile is satellite to unmodified smartphone.
So the device that's already in my pocket, no extra hardware, no special sat phone antenna looking like a brick from the 80s.
Exactly. If you have a standard 4G or 5G phone, the one you're holding right now, AST is building the network to connect to it directly from space.
And that's why this is a headline now.
It's the headline now because of the launch of Bluebird 6 a few weeks ago.
December 24th, right. A nice Christmas present for the investors.
A massive present. This wasn't just a test satellite. Bluebird 6 represents the largest commercial communications array ever deployed in low Earth orbit.
How large are we talking?
We are talking about an array that is nearly 2,400 square feet.
2,400 square feet. That's bigger than the average American house. That is a flying house.
It effectively is. And you have to visualize this engineering feat. It launches, folded up inside the rocket fairing, packed tight.
Right.
Then, once it's in orbit, it unfolds like a massive origami structure. And the reason it has to be that big is just simple physics.
Okay.
Your cell phone has a tiny, weak antenna. It's designed to talk to a cell tower maybe, 2 or 3 miles away? It isn't designed to scream at a satellite 250 miles up in space.
Right. My phone loses signal in an elevator.
Exactly. So, since the phone can't shout louder, the satellite needs a massive ear to hear the whisper. That's what that 2,400 square foot array is.
It's a giant sensitivity net.
That's a great way to put it.
Okay, that's a great visual. It's a flying cell tower the size of a house listening for a whisper.
Yeah.
I'll give you the engineering credit. That is impressive.
It is.
But I'm the skeptic here, and I look at the balance sheet, not just the engineering schematics. This company is effectively pre-profit. They are burning cash at an astronomical rate, pun intended to get this constellation up. So the thesis tease here, the question we have to answer for you, is can they actually deploy the 45 to 60 satellites they are promising by the end of 2026?
That is the question.
Because if they can, they capture this $151 billion space defense and connectivity boom. If they can't, well, gravity is a painful thing for a stock price.
That is the billion-dollar question. Execution is everything now.
So let's pivot to the numbers. Let's get into the fundamentals. Because when I pulled the most recent earnings report, Q3 2025, I saw revenue of $14.7 million.
Right.
Now, for a company with a valuation this high trading in the triple digits, $14.7 million feels like a rounding error. It feels like a lemonade stand.
If you only look at the raw number, sure. But context is everything. You see $14.7 million and say it's small. I look at that number and I see a 12,239% year-over-year increase.
Over 1,000% growth.
Correct. That massive percentage jump is the signal. It tells you they're shifting from pure R&D, where you spend money to test things, to early commercialization.
So it's the start of the ramp.
It's the start of the ramp. But more importantly, you have to look at the forward guidance. You don't buy a growth stock for what they earned yesterday. You buy it for what they're contracted to earn tomorrow.
And they have commitments.
They have over $1 billion in contracted revenue commitments.
And these are from the MNOs.
Yeah.
The mobile network operators.
Yes, we are talking about AT&T, Verizon, Vodafone. This is crucial to understand. These aren't small regional players taking a flyer on a startup.
These are the titans of telecommunications.
Exactly. And why are they signing these deals? Because they are terrified of churn customers, leaving them for a network with better coverage. They need to eliminate dead zones.
And this is how they do it.
This is the solution to the dead zone problem without AT&T having to build a million new cell towers in the middle of nowhere.
Okay, the partner list is solid. I can't argue with Verizon and AT&T backing them. But let's look at the financial health, because you can have great partners and still run out of cash. I'm looking at the cash position. They have a $1.2 billion cash buffer. That sounds healthy, but where did that money come from?
It didn't come from profit.
No, it came from debts.
It came from financing, yes. Specifically, an upsized $1 billion convertible senior notes offering due in 2036.
Let's pause and explain convertible senior notes for anyone who isn't a CFA. Basically, they borrowed money, and the lenders can turn that debt into stock later.
Oh,
Right.
exactly. It's a hybrid instrument. It's a loan, but with an equity kicker. If the stock goes up, the lender converts the debt to shares and makes a profit.
And if not?
If not, they get their interest payments. But here's the nuance. They also repurchased $50 million of existing notes. By doing that, they reduced their annual interest expenses by $13.5 million.
So they refinanced to get a better deal.
They refinanced to clear the runway. And you mentioned their CapEx, their spending. They have 500,000 square feet of facilities, over 1,800 employees.
A massive payroll.
A massive payroll. That $1.2 billion buffer is what ensures they can pay those people and pay for the rocket launches through the end of 2026. They don't have to go back to Wall Street with their hat in hand every 3 months.
They bought themselves certainty.
And in a capital-intensive industry like space, certainty is the most valuable asset you can have. It lets them focus on building, not fundraising.
Fair enough. They have the cash.
Sure.
But let's talk about the competitive moat, because we mentioned Starlink. Elon Musk exists. SpaceX exists. Why isn't SpaceX just going to eat AST's lunch?
This goes back to the intellectual property and that form factor we discussed. AST SpaceMobile holds over 3,800 patents.
Okay.
But the real moat is the density of the technology. Bluebird 6 offers 10 times the capacity of their previous models. It supports speeds up to 120 megabits per cell.
120 megabits. That's faster than my home Wi-Fi on a bad day.
Exactly. Starlink's direct-to-cell initiative is real, but it is currently focused on text messaging and voice very low bandwidth applications.
So not broadband.
Not true broadband. AST is doing video streaming from space to a regular phone. That is a massive technical leap. And the other part of the moat is the network effects from those MNO partnerships.
The switching costs.
Right. Think about it from AT&T's perspective. They are spending years integrating AST's software and billing systems into their core network.
So it's seamless for the customer.
Right, so that when you walk out of cell range, your phone just switches to the satellite without you noticing. Once that integration is done, are they going to rip it all out to switch to a competitor?
Probably not. It creates a very sticky ecosystem.
Very sticky.
Okay, so the fundamentals are promising but expensive. The tech is validated. Let's pivot to the charts. Let's talk technicals. Because if you've been holding this stock, you are shopping for yachts.
You are ecstatic. We have to call it what it is, a rocket ship chart.
Yeah.
The stock recently hit a record high of $104.80.
Triple digits. That's a big deal psychologically.
It's a massive psychological barrier. Crossing $100 signals, this is a serious company to a lot of people.
And the numbers are pretty wild.
Over the last 12 months, the stock is up 382%. Just in 2026 alone, and we are only in late January, it's already up 60%.
That is aggressive momentum, almost scary momentum.
It is total bullish control. The breakout really happened around the launch of Bluebird 6. That was the catalyst.
Everyone was waiting for it.
The market was holding its breath, waiting to see if the bird would fly and unfold correctly. It flew, it unfolded, and the stock price released all that tension to the upside.
But it wasn't a straight lineup. We have to mention the drop. When they announced that notes offering the dilution, the stock dropped 7.3% immediately.
It did drop, but what's fascinating is how quickly it recovered. That 7.3% drop was bought up almost instantly.
So the buy the dip mentality kicked in.
It validated it. The market looked at the raise and said, okay, you're diluting us, but you're securing the cash to win the race, and they bought back in.
And the volume backs that up. We are seeing high trading volumes, and we can't ignore the social buzz. This is a favorite on Reddit, on Wall Street Bets.
It's a story stock, absolutely. It captures the imagination, space, tech, beating the skeptics. It has all the ingredients. But you can't rely on retail forever.
You need the big boys.
Yeah.
Which leads us perfectly to the minds of the big players.
Yeah.
Let's talk sentiment. What is the smart money doing?
Well, the quantitative data is looking strong. If we look at the Alpha Vantage scoring, it's flashing bullish, but I want to focus on the analysts.
Okay.
B. Riley recently put a $105 price target on it with a buy rating.
Which is basically where it is now. It's trading at target.
Right. But here's the discrepancy. The consensus price target across all analysts is still a hold at around $60.80.
So the stock is trading at $104, but the average analyst thinks it's worth $60.
Right.
That suggests it has run way ahead of reality.
Or it suggests the analysts are behind the curve. That $60 average likely hasn't fully factored in the successful Bluebird 6 deployment.
So you think they'll upgrade?
When a stock moves this fast, Wall Street models often lag behind. I expect we will see a wave of upgrades to catch up.
Now, there's one specific piece of data here I found really interesting. Insider activity. Insiders sell for many reasons. Taxes, divorce, buying a house, but they only buy for one reason.
They think it's going up. Exactly. And I want to spotlight director Keith R. Larson.
Okay, lay it out. What did he do?
On December 10th, 2025, Keith Larson bought 675 shares. The total value was roughly $49,079.
Okay, I have to play skeptic here again. $49,000 for a director of a multi-billion-dollar company. That is pocket change. That doesn't scream bet the farm.
The amount is small, I agree. But look at the date. December 10th, 2025. That was exactly 2 weeks before the Bluebird 6 launch. And remember, at that time, Q3 results were mixed, people were nervous, and there was a very real risk that the launch could fail.
So he bought into the fear.
He bought right before the binary event. He put his own capital, however modest, at risk. It signals insider confidence in the tech execution.
That's a poker tell.
It is. If he thought there was a high chance of that satellite failing, he wouldn't have bought a single share. He would have waited.
That's a fair point. Timing beats magnitude in this case. What about the institutions?
Well, we know that $1 million convertible offering was oversubscribed. Remember, they initially went out asking for $850 million. The demand was so high they upsized it to $1 billion.
Right.
The conversion price on those notes is around $96.30.
That is a key number. $96.30.
It creates a natural support floor. Institutions were willing to lend money with the option to convert to stock at $96.30. That tells you they are comfortable entering at that price level.
So if the smart money thinks $96 is a fair entry.
It gives retail investors a lot of confidence holding at $104.
All right, I've let you be the optimist for a while. You've painted a rosy picture. Now we need to do my job.
Yeah.
We need a reality check. Let's go to the bear case.
Hit me with it. What keeps you up at night?
First off, dilution and debt. We glossed over it, but $1 billion in notes is a massive liability. If the stock price crashes and stays below that $96 conversion price,
They won't convert.
they are going to want their cash back. And AST will be stuck with $1 billion of debt.
It is a risk. Growth is being funded by leverage. If the growth stops, the leverage becomes an anchor.
Secondly, the valuation. They are trading at a massive premium based entirely on future execution. They are pre-revenue in terms of profitability.
You're paying for 2027 performance in 2026.
Exactly. And if they miss a step, the multiple contraction will be brutal. But my biggest concern isn't the money, it's the physics. It's the execution risk.
The roadmap.
Yes. They need to launch 45 to 60 satellites by the end of 2026 to make this network viable.
It's an aggressive cadence.
Aggressive. It's grueling. That requires a launch every 1 to 2 months, consistently, for a year.
Yeah.
Think about the supply chain, rocket availability, weather delays.
Or deployment failure.
God forbid, deployment failure. If one satellite fails to unfold, that entire timeline shifts right. And if revenue pushes into 2027, that cash burn starts to look very scary.
You're right. The margin for error is razor thin. Manufacturing these by hand is one thing. Mass producing them is a whole different industrial challenge.
And finally, the competition. The 800-pound gorilla.
Starlink.
Starlink has deeper pockets. They have a massive existing constellation. They can iterate faster. If Elon Musk decides tomorrow that he wants to solve this problem, he can throw $10 billion at it.
It's true. Starlink is a formidable enemy, but AST has the first mover advantage on this specific patented technology. Starlink would likely have to redesign their entire satellite architecture to match what Bluebird is doing.
So they have a lead.
They have the lead, but they have to run fast to keep it.
All right, we've looked at the tech, the money, the charts, and the risks. It's time for the verdict. What is the score?
Taking everything into account, the successful Bluebird 6 validation, the revenue commitments, the cash buffer, but weighing it strictly against that execution risk, I am giving this a bullish score of 8 out of 10.
An 8 out of 10. That is confident.
I think the Bluebird 6 launch was the pivotal de-risking event. Before that, it was a question of physics. Can this actually work?
And they proved it can.
They proved the physics works. We know they can build a 2,400 square foot array and unfold it in space. The science project phase is over. Now it's just a manufacturing problem.
Just a manufacturing problem. Tesla went through production hell, remember?
They did, but they came out the other side. Manufacturing is solvable with money and smart people, and AST has both now. The $1.2 billion buffer is crucial.
So the thesis is?
The investment thesis is this. This is a multi-year hold into 2026. You are playing the ramp-up of commercial service.
So you're saying hold through the volatility of the launches?
Yes. There will be bad days. There will be weather delays. The stock will swing 10% in a week. But the destination global broadband coverage for every phone on Earth is clear.
My final word on this is that it's high risk, high reward. But I agree with you on one thing. The validation of the tech makes the risk calculated. It's not a gamble on if it works anymore.
It's a gamble on when they can scale it.
Exactly.
And for the patient investor, that is a gamble worth taking.
And that brings us to the end of this deep dive. AST SpaceMobile is definitely one to watch, whether you're buying shares or just grabbing popcorn.
It's going to be an exciting year in orbit.
Before we go, here is a thought to chew on. If AST succeeds, and every square inch of the planet has broadband connectivity, what happens to the concept of remote work? Or the value of real estate in the middle of nowhere? If you can run a hedge fund from a cabin in the Yukon, does the geography of wealth change? Something to think about.
I might need to buy a cabin.
Thanks for listening. And remember, if you enjoyed this breakdown, make sure to subscribe, like, and leave a comment below. Tell us, do you think they hit the 45 satellite target in 2026? We want to hear your take. Catch you the next one.